Something didn't fully add up in Friday's close. Prices held, livestock strengthened, energy stayed stable. On paper, it looked supportive, but traders didn't chase it. When markets stop reacting to supportive signals, pressure begins to build underneath. Today, we break down what actually happened in Friday's settlement, where tension is forming now, and what can move this market next. This is Boots and Bushels. Good morning, and thank you for spending your morning with me. We're starting the week by breaking down Friday's official market close, the positioning behind it, and the pressure points traders are watching right now. Because this market is not drifting, it's balancing. And balanced markets eventually choose direction. Let's start with grains. Corn settled at 430.5 on Friday, down 4.25 cents. The market held support, but buying conviction was limited. Traders showed interest, yet momentum never accelerated. The key tension here is demand versus patience. Export demand hasn't weakened dramatically, but it also hasn't strengthened enough to push prices higher with confidence. It leaves corn in a holding pattern, supported but not breaking out. What traders are watching now is simple. Does demand confirm early this week, or does hesitation continue? Because hesitation in a supported market often leads to sideways trade until something forces movement, and forced movement tends to be sharp. Soybeans finished Friday at 11.14 3/4, up 2.5 cents. Bean maintained structure, but like corn, the follow-through wasn't aggressive. Buyers showed interest but not urgency. This creates tension between expectation and confirmation. Demand signals exist, but traders want proof before pushing the market higher. If confirmation appears, beans can move quickly. If not, consolidation continues. And consolidation is where markets either reload or weaken. Right now, the risk is not collapse, it's stall. Installed markets rarely stay quiet forever. Chicago wheat closed Friday relatively steady, continuing its effort to stabilize after recent volatility. Wheat remained one of the most reactive markets, driven heavily by global signals, not just domestic conditions. International production headlines, export competitiveness, and weather across major producing regions continue to shape direction. Wheat doesn't need strong bullish news to move, it only needs uncertainty, and uncertainty still exists. Live cattle settled Friday at $237.65, up $2.05. The market continues to show underlying strength, supported by tight supply and steady demand tone. But traders are watching one key relationship: feed cost. Strong cattle markets depend on manageable input pressure. If grain strength accelerates, margin pressure builds quickly. For now, cattle remain firm. But this balance between feed cost and cattle strength is one of the most watched signals in agriculture right now. Feeder cattle finished Friday at $367.83, up $3.75. The market maintained structure and continued holding strength, but buying remains measured, not aggressive. Traders want confirmation that feed costs won't surge before pushing feeders significantly higher. If grain markets stay contained, feeders can continue strengthening. If not, pressure builds. Lead hogs settled Friday at $97.98, down 40 cents. The market continues stabilizing after recent movement. Nothing is broken, but traders remain attentive to processing pace, demand tone, and seasonal positioning. This is a balanced market, but balanced markets shift when expectations change. WTI crude oil settled at $63.50, up 21 cents. Energy stability matters more than most realize. Fuel influences production costs, transport expenses, and overall confidence across agriculture. Right now, crude is not adding pressure, and it's not creating instability. Stable energy supports balanced markets. And the weather remains one of the most powerful forces shaping this market, even when it isn't dominating headlines. Recent patterns show mixed moisture and temperature conditions across key regions. Nothing extreme, but enough variability to keep traders attentive. The market is highly sensitive right now to any sign of sustained dryness, unexpected cold, or planting season disruption. Weather doesn't need to be dramatic to move markets. It only needs to shift expectations. And traders are watching closely this week. In ag news, farm income pressure continues. New projections continue to show tightening margins across parts of agriculture. Input costs remain elevated compared to recent years, while commodity prices are stabilizing rather than surging. This creates margin compression, not collapse, but pressure. Markets watch this closely because margin pressure influences production decisions, acreage strategy, and long-term supply. The key question is whether producers adjust or absorb. Demand signals mixed, not weak. Recent demand indicators show stability but not acceleration. This isn't bearish, but it doesn't justify aggressive market expansion either. Markets don't need weak demand to stall. They only need uncertainty, and uncertainty remains present. Global supply is still influencing direction. International production and supply signals continue shaping U.S. markets quietly in the background. Nothing disruptive yet, but global uncertainty keeps traders cautious. Markets move on expectations, not history, and expectations remain unsettled. What traders are watching this week? Here's the key pressure points. Will grain demand confirm or stall? Can livestock hold strength if feed costs rise? Will weather shift expectations? Does global uncertainty increase or ease? Markets are stable, but not relaxed, and stable markets under tension eventually move. This market is balanced between support and hesitation, not bearish, not fully bullish, balanced but watching. If demand strengthens, grain can push higher quickly. If feed costs remain controlled, livestock holds strength. If weather stays neutral, markets remain steady, but if any of these shift, direction comes fast, and traders know it. Thank you for spending your morning with me. This has been Boots and Bushels, tracking the markets and signals and the pressure shaping agriculture. We'll watch how this week develops, and we'll be back here tomorrow morning.